Hello everyone, welcome to QuantSap. Myself Vignesh. Thanks again for joining me in this video. So already you might have seen in the thumbnail, today's topic is about how to deal the sideways market. Okay, say suppose usually what happens, usually the retailers get trapped when the market stays sideways, correct? Because usually in sideways market we see that option sellers make money, correct? But what usually an option buyer seeks, correct? Option buyer usually seeks for a momentum because option buyer usually has a low capital, and when you try to execute a sell strategy, say if you want to go for option selling, the margin is slightly on the higher side as compared to the option buyer. So most of the retailers usually prefer, they usually try to scalp, or say they usually try to capture a swing, and they prefer option buying rather than option selling, correct? So let's talk about how you can benefit when the market stays sideways. Okay, so let's talk about it, and let's talk about few strategies, which is like a short iron butterfly and short iron condor, one of the most, I would say, widely used strategies when the market stays sideways. Okay, so before getting into today's video, like those who are new to this video, like those who are new to QuantSap, and if you haven't downloaded QuantSap yet, I would ask you to kindly download the application, because as soon as you download QuantSap application, the link for downloading the application is given in the description. So as soon as you download, you will be getting access to 25 free tools immediately. Okay, so you can definitely go and explore those free tools that will definitely help you in your trading journey. Apart from that, you might be knowing that QuantSap has approximately, I would say, 70 to 80 tools. Okay, so out of which 25 free tools you'll be getting access immediately. Apart from that, if you want to know more about the paid versions, then what you can do is, see, once you log in, just click on this learn section. This is free for all the users, irrespective of whether you are a paid user or a free user. Just click on video library. Okay. So now what is video library? I would say video library is basically the banks of videos. We have almost covered, I would say, all the videos, all the tools of QuantSap, like almost 70 to 80 tools, and that too in multiple languages. The languages that we have covered are English, Hindi, Marathi and Tamil. Okay, so you can definitely go and explore these tools. Okay, and if you have any query, the helpline number is given in the top. You can definitely reach us. Okay, and we'll respond you immediately. Okay, so let's talk about the sideways market. Okay, give me a second, let me share my blackboard. Okay, so say for example, this is a range. Okay, say for example, based on OI or based on technical charts, you have got a range, and usually what happens is the market oscillates between these range. Okay, say any stock or nifty or index or whatever. Okay, but what happens is whenever the stock approaches the resistance, we usually feel that okay, it has tested the resistance multiple times, this time there is a possibility to break out. Okay, so every time whenever it approaches, we feel okay, this time, but usually in sideways market, it this time never happens, correct? And the market usually stays range bound, correct? So in that this point in time, what happens is whenever the stock approaches the resistance, usually the retailers get trapped, because in expectation of breakout, they go and buy a call. Okay, or else whenever it approaches this say support level, they usually go and buy a put, expecting the stock to break down, but nothing works. Who wins? The one who has sold the call over here, call writers, the one who sold put over here. That is, in short, the writers win when the market oscillates in a range, correct? So how, like what exactly strategy, like how you are supposed to frame a strategy when you are expecting the market to stay range bound? Which are those two strategies which we are going to talk about? Okay, so today, give me a second. So today we'll be talking about two strategies. One is short iron butterfly. Okay, and the second one is short iron condor. Okay, so there's a hair splitting difference between short iron butterfly and a short iron condor. We'll learn both of these strategies and we'll check how to implement this strategy, and we'll take one of the stocks as well wherein the stock has been range bound for, I would say, approximately 6 months or 1 year. Nifty is trending, but there is one such stock which I have been tracking for almost 6 to 8 months, and that stock has always been range bound. That even personally, I would say, even I got trapped n number of times in that stock. So definitely we'll go and talk about that stock as well today. Okay, so what is short iron butterfly? Okay, see, for example, a stock is trading, this is the CMP. Okay, a stock is trading over this level. Okay, and you are expecting it to stay between this level. Okay, so usually what you can do is, this is ATM, correct? If the stock is trading here, this is ATM, correct? ATM strike. So what you can do is sell, call and put. ATM call and put you can go and sell. Okay, so at this point, suppose you are selling ATM call and put, and suppose the stock expires in this range, then definitely you can make decent money. But what? Because see, whenever you go for naked option selling, there is unlimited risk. Correct. Whenever you are option buyer, the risk is limited. But when you are an option seller, and that too when you sell your options naked, there is a possibility that the stock might get momentum based on a news or say any event. Okay, anything. Like suppose if the stock captures a huge move, then there is a possibility that you might end up draining all your capital. Correct. So in that case, what? In order to prevent a huge move, we will go and sell 1 or 2 strike, depends. Okay, either 1 or 2 strikes or based on the resistance. Say for example, based on call writers and based on put writers, I will go and sell. If I'm expecting this to be the range, I'll sell ATM call and put. I'll go and buy OTM call. Okay, in order to prevent a move on the upside, I'll go and buy an OTM call. In order to prevent a move on the downside, I'll go and buy OTM put. Okay, so selling ATM call and put, a few strike OTM call I'll buy, few strike OTM put I'll buy to hedge a move on either side. Correct? So this is short iron butterfly. Now let's talk about short iron condor. The strategy is almost same. It will look like the same. Now, what is the slight difference when it comes to condor? Say again, this is the current market price. Let's say the current market price is say 720. Okay. So in case of butterfly, what we did, we sold ATM call and put. That is 720 call and put I sold. Now, we're talking about condor. When it comes to condor, what we'll do is, we'll go slightly OTM call and slightly OTM put, say 1 or 2 strike over and above. Say for example, I'm going and selling 730 call and say 710 put. Okay, both sell. Okay, I have sold 1 strike OTM call, 1 strike OTM put I have sold. That is, I am creating in short a short strangle. Here what I did, a short straddle, and in case of short iron condor, I am creating a short strangle. Okay. Now still, whether it be a short straddle or a short strangle, suppose the stock captures move on either side, the risk is going to be unlimited. So be it a short straddle or a short strangle, I am supposed to hedge this. Correct? So when it comes to hedging, again what I'll do, I'll go few strikes OTM based on the open interest. Okay. So say for example, I'll go and buy 750 call to protect the move on the upside, and say for example, I'll go and buy 690 put on the downside. Okay, both of this will be buy. Okay, so I hope you understood the difference. There is slight hair splitting difference between a short iron butterfly and a short iron condor. Talking about short iron butterfly, you will be selling short straddle and then you will be hedging your positions, okay, by buying an OTM call and an OTM put. When it comes to short and condor, instead of selling short straddle, you will execute a short strangle and then you will go and hedge your positions by buying an OTM call and an OTM put. Okay, so I hope this might be clear. Give me a second. Now, let us get into the QuantSAP home application and let us implement this strategy on a specific stock. Okay, so it will be very much clear to you. Okay, so I hope this is the home page. Okay, correct. So let me give you a brief introduction about the home page. So if you haven't installed, the link is there. Kindly install. As soon as you install, you can see this is the home page. So what are the tools available in the home page? See synopsis. This will give you a brief idea about which are the stocks that are up based on price, based on OI. It will indicate like which stock has started gaining OI, where the OI is dropping. So based on this, you can go and gauge the built ups. Okay, and apart from that, if you see days high low, now here on the right hand side top, if you see, the major indices are present over here. See Nifty, Fin Nifty, Bank Nifty. Okay, and their built ups are given. Like as of now, there is long built up in all the three major indices. So this will give you an overall bird's eye view to gauge the market sentiment. So this will be very helpful for you. Apart from that, option chain is there, unusual option activity. So n number of fancy indicators, I would say you can definitely go and explore them. Okay, so now let us go and check a stock. Okay, which has been range bound, I would say, for quite a long time. Okay, so and many of the retailers are, I think many of you also might have been frustrated with this stock. Okay, so the name of the stock is, I have discussed earlier as well, SBI Cards, correct? So I would say one of the most frustrating counters, correct? See, this is actually forming a kind of triangle pattern, I would say. Let us go and check a trend line. Let me mark this. Okay. Okay. So if you see this, check. This is forming, I would say, kind of a descending triangle, we can say. Correct? See, multiple times the stock tried to breach this level. See, 1, 2, 3, 4, 5, and again the sixth time. So multiple times the stock tried to breach, but ultimately what is happening is the stock is range bound. If you see on the upside, it is finding difficult to take 750, and on the downside 700 is being protected, correct? Let's say this is the level. If you see multiple times after this level, if you see continuously the stock is range bound around this level. Okay, it's been a long time, I would say, since we can say 2023 August. Okay, so it's approximately 1 year, I would say, the stock is range bound. This is a weekly chart. Okay, so you'll get a clear picture in the daily chart, I would say. Okay, give me a second. Let me mark the daily. Let me plot the daily chart. So see, here it is here's the daily chart. Okay, so see, continuously the stock is range bound, correct? So multiple times it is trying to break the range, but it is unable to break the range, I would say. So in this case, like in these kind of stocks where the stock usually stays range bound, what we can do is, see, as compared to Nifty, if you see, Nifty has given a decent returns, but this has hardly fetched any returns. I would say rather this has given negative returns, correct? But how to make money from these kind of stocks? Okay, so let's go to option. First, let's go and check out the open interest. Okay, so let me go to search and let me go and check open interest. Okay, so see, the current price is 713. Okay, so first let me give you an overview about this open interest. Now, if you see on the left hand side top, there is a search symbol, like whichever stock you want to check, you can definitely go and check. You can set the expiry as per your convenience, like whichever expiry you are willing to trade. Now, if you are trading stock specific, then definitely the monthly expiry. Okay, the lot size is given. Okay, and then There are n number of options, like whether you want to see both call and put or only call writers you want to see. So let's keep it in the, let the format be default. We won't change anything. Okay. So now the current price is 713. Now for August expiry, if you see 750 and then I would say 800. Okay, but 750 is also a decent resistance if you see, and I would say check 700 on the downside. Okay, so there is a possibility, and that is what the stock is been doing for a long time if you see, except some special event like budget or results. What the stock has been like, see, there is a possibility that the stock might oscillate, and this is what the stock has been doing for the past 1 year. It is range bound from 750 to 700 continuously. This stock was range bound, and still if you see the price is 713. So say for example, even if in August expiry, say the stock stays range bound, how you can make money? So I can clearly see 700 as a support and 750 as a resistance, correct? So I am expecting the stock to stay in this range. Okay, now let us go to trading. See, this is trading. Give me a second. Let me go to trading and options architect. Okay, so what is option architect? Say for example, if you want to say find any strategies, like which strategy to deploy, and say for example, if you are bullish on any particular counter, then these are the bullish strategies which you can opt for. Say if you are bearish on any particular counter, these are the strategies. You can accordingly go and check out how the strategy is framed, and accordingly you can customize your strategy. As of now, I am not going to opt for the system driven strategy. I'll go and customize my own strategy, because I have seen that the stock is range bound and I know the upper range based on OI, and also I have decoded the downside range based on OI. So let me go and customize my own strategy. So SBI cards we have already taken. Okay, now let's go and first check out short iron butterfly, correct? So see, now what will be more beneficial, short iron butterfly or short iron condor? If you are expecting the stock to stay range bound, which will be more beneficial? If you ask me, I would say, see, the practicality is short iron butterfly will be more beneficial if the stock stays range bound, because you are selling ATM options, and the premium of ATM options are more as compared to slight OTM options, because in case of short strangle, in case of short and condor, we slightly go OTM and we sell a strangle, correct? So the premium will be a bit less as compared to the short straddle. So always short and butterfly will be beneficial. Like if you want to make more profit, then there is a possibility that short and butterfly might help you to fetch more money, correct? Now let me see, it has automatically fetched ATM strike. So what the short and butterfly rule says, I am going to go and sell ATM call and put, correct? Say ATM call and put I have sold, correct? Now if the stock stays range bound, definitely I am going to make a lot of money. See, the expiry is, now if you see here, Thursday 1st August, okay, and for expiry there are 28 days left, correct? So I am willing to hold the position for whole 28 days. I want to square off my position at the end. Now if you see, the maximum profit that I could make is 25,600 if I execute simply a short straddle rather than converting it into a butterfly. Okay, see, what you can do is check at 705 you will be making what, how much money you will be making, that is what it is showing. Say if the stock goes down to 665, see how much you will be losing. So that is the problem. If the stock finds a direction on either side, you will end up losing money. Now see, on the upside, if the stock, see, the break even is same based on OI. What we gauged is, see, on the upper side, if you see 745 is the break even, correct? So see, from 750 onwards you will start losing money. Now in order to hedge this position, what we can do, correct? So I'll go and buy say 750 was the resistance, correct? So say I'll go and buy a 750 call, and I'll go and buy a put Okay, you can definitely go and customize this. I am randomly taking based on OI, but it is not necessary that you have to take the same leg. Okay, now 700 put I'll buy, correct? Check how this looks like. See, this is the break-even chart. Okay, so let us go to the P&L table. So if the stock say goes on the downside, say 665. Okay, if the stock goes on the downside, say 665, still we will make approximately 1360. But if the stock goes on the upside, the maximum loss I would say is 14640. Okay, additionally, if you want, you can go and check out over here. Say for example, the stock moves to 800. Okay, see what will be the scenario. If the stock moves to 800 on the higher side, your loss will be 14640. Okay, and say for example, if the stock moves on the downside to say 600. Check. If the stock goes on the downside, there is a possibility, see, still we will end up making, so our break even starts, say for example, post 735. Okay, post 735 we will start making losses. So if you want, you can go and adjust the legs accordingly, or else what you can do is you can simply see, if you are confident that there won't be a significant gap up or gap down in this counter, then what you can do is you can go and sell ATM call and put, and say if the stock is breaking on the higher side, if it has started gaining momentum on the higher side, you can go and hedge on the call side. Okay, and if the stock has started breaking down, then you can definitely go and hedge on the downside. Okay, so you can, it is not necessary that you are supposed to deploy this short and butterfly at one go. You can sell ATM, or you can sell short straddle, you can execute, and then you can, based on the direction, you can go and hedge your positions accordingly. But I am just explaining you how you are supposed to frame a strategy using this tool, okay, when the stock is range bound. So see, this is how you can do it. Now say for example, we have to create a short and condor. Then what I'll do is I'll go and sell a triangle, correct? So say 1 strike or 2 strike OTM, say 2 strike OTM and say 2 strike call and put OTM. Now see, again if the stock drops down, still I would end up making money. Now on the higher side, if you see, check, if the stock moves to 810, I'll be losing approximately 14,000. So the higher risk is on the higher side, correct? So even short and condor, if you want, you can go and make, if you are comfortable with short and butterfly, you can go and deploy short and butterfly. So the strategy is up to you. You can adjust these legs in order to minimize your profit. See, for example, what we have hedged 750, call we have added, correct? So if you want, you can go and, give me a second. Okay, see, if you reduce this strike accordingly, your profit on the downside will get reduced, but at the same time your losses, if the stock moves up, say for example, if the stock has started gaining significant momentum on the upside, see, even at 810, I have just reduced this strike from 750, I have reduced it to 740. Okay, so in that case, even if the stock shoots up, my losses are slightly minimized. Okay, and the maximum gain that you will be making from this stock is, if the stock stays from 700 to 720, 730 range, then you will be definitely making good money. So this is, I would say, short and condor, and accordingly we also saw short and butterfly. Okay, so I hope you might have understood this strategy and when to deploy this strategy, which kind of stocks you are supposed to pick for this strategy, and how you are supposed to identify the levels. Based on open interest, we are supposed to identify the levels, and historically go and check the movement, how long the stock has been sideways. Okay, so I hope definitely you might have enjoyed this video, and like this video, share, subscribe and comment. Okay, so show lots of love. Okay, thanks for your valuable time. Stay tuned, we'll join you again in the next video. Thank you.